NDA safe messaging for executives, ESL for finance, buy side. Welcome! In this micro lesson, we'll show you how to speak to investors with clarity while staying NDA safe. The aim is to share insight without leaking material, non-public information. Your audience is investors, analysts, and LPs who value disciplined communication. Keep the tone precise, cautious, and value-focused. Explain how you think, not just what you know. When you master this style, you project confidence and maintain compliance. The result: useful conversations that build credibility, avoid legal potholes, and still answer what the buy side actually cares about. Know your no-go zones. Do not share undisclosed numbers or offer new guidance that hasn't been released publicly. Avoid client names unless you have explicit permission or they're already public. Skip pipeline details like counts, values, or deal terms that could be reverse engineered. Steer clear of forward-looking promises, such as fixed revenue targets or guaranteed timelines. If it would surprise the market, compete with public disclosures, or influence trading decisions, it's safer to keep it out. When in doubt, generalize or defer to what has already been disclosed. Protect yourself with disciplined phrasing. Use ranges, trends, and directionality. Mid-teens growth, improving conversion, stable churn. Attribute insights to public sources, as noted in the Q2 filing, or per the earnings call. Choose conditional and hedging verbs. We expect, we aim, we believe, could, may, which signal uncertainty. Prefer process over specifics. Discuss go-to-market motion, pricing framework, or capital allocation priorities rather than exact figures. These frames keep you informative, professional, and aligned with disclosure rules. Give investors the essentials fast. Start with a one-line investment thesis: who you are, the edge you have, and where value grows. Then hit the drivers: revenue, growth sources; margin, efficiency levers; cash, conversion, runway; and risk, what could break. Clarify time horizon and key catalysts: product releases, regulatory events, integration milestones. Finally, state how you measure success: leading indicators, cohort trends, retention, or return on invested capital. This structure respects time, reduces ambiguity, and lets the buy side map your story into their models. Upgrade risky claims with compliant language. Instead of "we will hit $50 million," say, "we are on track to meet prior guidance," which references public disclosure. Rather than naming clients, use anonymous stature: a top 3 global insurer. For pipeline, avoid totals. Prefer quality signals: healthy, diversified, late-stage pipeline. Skip exact margins. Convey movement: margins expanded year over year. These phrasing shifts preserve insight, trajectory, scale, and quality, while avoiding material specifics. You sound transparent, not reckless, and you keep the conversation focused on fundamentals. Always ground claims. Cite public sources, as disclosed in Q2 10Q, or per the August earnings call. Anchor with ranges and YoQ deltas. Low double-digit YO growth, sequential improvement. Present opinions as management's current view, not immutable facts. Management currently believes. Our view is. When discussing outlook, remind listeners of the safe harbor and that outcomes can differ due to risks. Clean attribution shows discipline, protects you legally, and helps the buy side trace statements back to public materials. Use a tight flow investors love. 1. Headline: the takeaway in one sentence. 2. 2 drivers, the main levers with concise evidence. 3. Risk plus next milestone, what could derail it, and what's coming next. Example, headline right-pointing arrow, demand remains resilient. Evidence right-pointing arrow, renewals improved, and enterprise wins broadened geographically. Caveat right-pointing arrow, supply constraints could limit near-term upside. Next update post Q3 close. Keep sentences short, verbs active, and avoid idioms that can confuse or overpromise. This structure keeps you crisp, accountable, and compliant. Final checklist for every conversation. Disclose less, explain more process. How decisions are made beats raw numbers. Use hedges, ranges, and attribution to stay aligned with public info. Clearly frame your thesis, drivers, catalysts, and risks, so investors can model the story without fishing for restricted data. Precision isn't evasive. It builds trust, reduces legal risk, and protects NDAs. With these tools, you'll deliver value-rich answers that inform the buy side while keeping compliance and credibility intact.